Hello and welcome to Nirmal, ladies and gentlemen. I'm Hiral Dadia. We have with us Marc Faber, editor and publisher of the Gloom, Boom and Doom Report, who is joining us on the show. Marc, welcome to the show and thank you for finding time for us. Uh, Billionaire, they call Dr. Doom in Tony Robbins' book, Money Master of the Game as well. I mean, a lot of names that have been coined for you right now with regards to markets. Taking the current pandemic situation, I mean, what is the sense are you picking up with the global health crisis and the way economies are handling it right now?
Well, first of all, from a more historical, philosophical point of view, the world changes constantly. I mean, you don't live the same life your grandparents lived in India. And I think most of your viewers have also a different life than their parents had and their grandparents had, and so forth. So we have constant changes. And obviously, we had a global economy that was beginning to slow down actually long before the COVID-19 crisis hit. And the Federal Reserve was aware of some problems in the money market because they started to print money again at the end of August 2019. In other words, almost a year ago, and more than half a year before the COVID-19 became known.
Hmm.
So that there were some issues in the financial markets, and there were issues economically around the world, the slowing down global economy. And then we had this COVID-19. And in my view, what I find a little uh, disconcerting is that governments around the world basically shut down the economy.
Hmm.
And in my view, they created for many people enormous hardship, enormous hardship. It doesn't touch me because I live in a large house and I have a large office and plenty of land around my house and office. But if you imagine that someone lives with his relatives in a small apartment in Mumbai or wherever, and he can't go out, life becomes extremely difficult. And for many people, they don't have any money. You
Right.
understand? In America, close to 50% of the population has no savings.
Hmm.
And for a lot of these people, life becomes very, very difficult. In Thailand, they shut down uh, the arrival of foreigners. In other words, foreigners can't come. The hotels are closed, the bars are closed, the restaurants are closed. Now, gradually, they are reopening,
Hmm.
but a lot of them will not reopen. I would say the global economy after the crisis is over, if it ever, maybe it will never be over, but once it's over, the global economy will be a different economy than it was before. In other words, there will be less traveling,
Hmm.
there will be less hotels, there will be less shops, and so forth and so on. And the price of all this, in my view, is very, very high. And the worst part is that actually the poor people suffer the most. No, it's not the rich people that suffer. The rich people have $1 billion. What do they care whether they have 1 billion or 900 million or 1.1 billion? But the poor people, for them, it's often a question of being able to survive and essentially going into destitution. So this is the way I see it. And the financial markets, they are in the sky because, as I mentioned, uh, the poor people are not in the financial markets. And the money printing favors people that already have money, that already own land, that already own stocks, and so forth.
Correct. I mean, what you're saying is so true right now that it's the poor people who are suffering out of this in terms of the crisis. However, if you see in the last couple of months, as you already mentioned, that we were already seeing a slowdown, and that's what actually the economic statistics pointed out to us. And it was mainly COVID that came in as the icing on the cake that really knocked the markets down.
Yes.
And if you talk, and when I heard you talk, even in the month of March, it clearly indicated, Mark, that by these kind of declines, and this could have been the best opportunity, and I think the ones who heard you at that point in time have made money today. So that's a brilliant, uptrend the ones who bought in the March lows have seen. But what would you attribute this up move to right now? Because we're again almost coming back to those March highs that we had seen from where we crashed.
Yes, we are up in India from the low, which was around 25,600. We're up now to a level where the percentage increase is 47% from the low.
Mm,
We're still down 10% from the previous high on January 20, but the recovery has been very powerful.
mm,
And as you know, in the US, many stocks have made new highs. The whole FANG stocks, that includes Netflix and Amazon and Apple and so forth, and Zoom, which we are using, and so forth.
yes.
All these companies, they've done very well at the semiconductor stocks. But if we look at the US market, say as an example, and I could cite the same about India, you take 10 stocks, they have pushed the index higher.
Mm,
You take the broad market, say the Wilshire
mm,
5,000 index, or you take a broader index like the Russell 2000 and so forth. The broader index is no higher than in 2015. India at the low in March was no higher than in 2015. It's recovered again a lot, but still, it's not statistically that elevated. I think we can still go up, but
mm,
not because of the economy.
mm,
Uh, that I've pointed out in earlier interviews. Nowadays, the financial markets are so large relative to the real economy that it's the asset markets, properties and stocks and so forth, that drive economic activity, not vice versa. And it's in our case, at the present time, it's the central bank's money printing. Now, normally, money printing to the extent that we have uh, would lead to currency weakness. But because all central banks are doing it, the exchange rate between different currencies does not change all that much. But as you know, this year the price of gold in dollar terms is up 20%.
absolutely.
Rupee terms, it's up something like 25%. So uh, the, the money printing leads to essentially currencies going down in value relative to precious metals.
Mm. Right. But Mark, with what's happening right now, the COVID curve, if you go to see, has hardly flattened. The case counts are still rising across. There is uncertainty that's prevailing over the economic revival of different economies, though central bankers, as you mentioned, have been pumping in liquidity, they have been printing in money. And if you talk from an India perspective as well, we're staring at the worst growth performance in the past 4 decades. Now, despite of all this bad news, you have stock markets which have rebounded to March levels. What explains this kind of exuberance?
As I said, money printing, and let's say you take me as an example. I'm an investor, and I look around the world. I can have dollar deposits. They will pay roughly 1% per annum. I can have deposits in Europe. They have negative interest rates. And with my money, I can buy bonds. You know, I can find bonds of reasonably good quality companies at say 4 or 5%, but it's not a very attractive return considering the risk of the borrower. Now, if I go to an investment advisor, he will tell me, or I'm an investment advisor, he will tell me, you know, you should own some stocks because in the long run, stocks perform better than cash. Cash, its purchasing power diminishes. I remember the first time I came to India was 1973, probably before you were born. And
Yeah.
at that time, with $1, I could buy 7 rupee, 7. And then for a long time, it was around 25, 30 rupees. And as you know, we're over 74 now. And this is the depreciation in the value of paper money. And in my view, this will continue because in India, you don't have quite the same problem we have in Europe and in the US. But in the US, it's become now a very political issue. Uh, they are people who want to get Trump out. They will do
Absolutely.
anything to get him out. And to some extent, I can understand these people. On the other hand, he also has done a few things that were not all that bad. Anyway, the states, they are basically bankrupt. You know, like Illinois, California, New Jersey, and so forth. And they will have to be bailed out one way or the other. In some cases, it's not the state that is in such a bad condition, but the state pension funds, you know, the retirement funds of the police, the retirement funds of the teachers. It's very difficult to go to these people and say, look, we don't have enough money in the fund to pay you every month your pension. We have to cut your pension. Uh, this is very difficult to do. Equally, it's impossible to increase the contribution of the young teachers who pay for the retired teachers. You get it. The difficulty is to balance these pension funds. I think eventually the federal government will have to bail out the states and bail out the whole pension fund industry. These are called unfunded liabilities of the government. They are a multiple of what the government debt is on the federal level. A multiple. The government debt, the federal debt, is something like $21 trillion. But the unfunded liabilities, they run up to something like 70, 80 trillion dollars.
Right. So,
In short, the system is bankrupt, both in Europe and the US, and they can only save it by printing money.
right. So, but what will be the impact, Mark, then on their currencies? Do you think is this the, I mean, do you think, would you advise holding a dollar at this point in time right now in your
Yes,
portfolio?
as of today, I would hold dollars for a rebound because it's already weakened quite a lot.
Absolutely.
Uh, the euro is up on the year. Even today, the Australian dollar is up slightly on the year against the US dollar. So I think the US dollar may rebound. But in the long run, the US dollar has significant downside risk. I really think it's not little downside risk, but significant. And this downside risk may be not that large against the euro and other currencies, but it is significant against the price of some assets like gold, silver, platinum, other commodities as well, and against the price of some real estate. And I think real estate is actually an interesting proposition here because the COVID-19 has exposed the danger of living in congested cities.
Mm.
Now, say you're someone who lives in a congested city and you have a choice if you live outside the city, traveling distance 1 or 2 hours, you can buy a property at a much lower price, a much larger property with some land. And nowadays, as you know, when I started to work, if you wanted to be a stockbroker or a financial advisor, you had to be in a financial center in either Hong Kong, Singapore, New York, London, Zurich, whatever it is. Nowadays, you don't have to be in a financial center. I have my Bloomberg on my computer. Wherever I go, I get the Bloomberg news, and I can communicate with you as if we were in the same studio. The
Absolutely.
advantage being that I can smoke while I'm talking to
Yeah,
you, whereas in your studio I cannot.
correct. Absolutely. I mean, so I think because of this, I mean, the point that you're making over here is as well that real estate, no matter you don't really need to buy a house, probably in a large city, you can be in the suburbs, you can be on the outskirts. And that's where the boom is going to be because people are now working from home as well. So the importance of owning a house has become important due to COVID-19. But Mark, with this rally that we are seeing as well, which you mentioned is a liquidity fueled rally, do you think fundamentals will catch up soon?
Well, I don't think that fundamentals will recover
Hmm.
again fully. But in the world of investments, we have to look, we have a lot of liquidity, okay? The liquidity, as I said, can be invested in cash, a low return, and the risk of a depreciation of paper money vis-a-vis assets like real estate and stocks and commodities, in particular precious metals. So if I have money, I, I, I would take a huge risk by not owning any stocks and by not owning any land and not owning any precious metals.
Hmm.
You understand? The When you print money, the perception of risk changes entirely. I grew up in the 50s. My grandparents, they never owned any shares. They owned their house. And uh, my grandparents that lived in the mountains, they owned a hotel. They bought a few stocks in the air cable in Engelberg, which leads to a glacier. And other than that, they never speculated. What was safe at that time was to have a savings account in a bank.
Correct.
But that is no longer safe to have a savings account in a bank because, as you know, the banks are not in the best condition. Whereby, having said that, the banks globally have performed so badly in the stock market that they are probably now relatively attractive from the relative point of view. They're depressed, they're hated, everybody knows they have a lot of bad loans and so forth. But probably if you take a view for 2 or 3 years, the banking sector is actually quite attractive.
Hmm. Right. And the way the markets have been rallying right now, Mark, from March lows. In fact, US as well, the kind of record highs that we've seen. Do you think they are actually waiting for an event right now to come back to say uh, actual valuations, realistic valuations right now? Because in spite of all of these troubles, in spite of FY21 or even calendar year 2020 being a washout for majority of the companies, you are seeing good numbers. Now, if that happens, do you think it could be the elections in the US that could be an event that could lead to a washout again in the stock markets?
Well, that's a good question because A, it is of course true that everything in the world trades around the S&P 500.
Mm,
You know, the S&P 500 drops 5% in a day. For sure, the foreign markets will also be down. Maybe not 5%, maybe more and maybe less. But the general direction will be also down.
mm,
Now, the election is interesting because when Trump got elected in 2016, 4 years ago, everybody said, if he is elected, the stock market will go down. And I took the view at the time that actually an election of Trump would be moderately favorable for the stock market because he would cause less damage than Hillary Clinton. And one of his programs was actually to reduce regulation, which, you know, that he's done. And he doesn't get enough credit, but regulation has diminished in the US. Many of my friends say it's easier to do business now than before. But what has happened, the difficulty in America is the federal government reduces regulation and the states increase regulation.
mm,
So it's a wash, basically. It's like the federal government can cut taxes, but the local governments can increase taxes. So again, it's very difficult to run the country anyway. If Biden is elected,
mm,
he has or has already made concessions to the very left wing of the Democratic Party. These are BLM supporters, and these are people like Alexandria
mm,
Ocasio-Cortez that would prefer to have a system like Latin America and Venezuela in the United States than the traditional US, the way the US was for 150 years until, say, 20 years ago. But the left wing, they want to increase taxation, and
mm.
that is going to happen. Now, I'm not saying that taxation alone will kill the stock market, but it's not a favorable development because if you're wealthy, you may decide to sell some stocks ahead of the increased capital gains taxes. So I think the stock market may be still okay for a few months until maybe August or so, but towards the election, I think the stock market is going to sputter. In other words, it won't go up much more.
Right. So are we trying to say over here, Mark, that if Trump does not get re-elected, what could be the changes that we could expect according to you?
Well, more regulation. Say Biden gets elected, more more regulation, more corruption, much more corruption, and more government spending on social programs and so forth. So I think that actually Biden victory wouldn't be very good for the US. And whether it's Trump or Biden, in my view, the dollar will go down in value.
Right.
Because the Republicans, when you think about it,
Mm,
it's remarkable that through the back door, Trump kind of introduced basic income.
mm,
That's what they've done.
mm,
And they've done it in a very high doses, $600 a week per person. Many people earn much more this way than going to work. So there's
absolutely.
no incentive to go back to work. They're not even looking for jobs. They are quite happy to get the benefits from the government. But as you know, eventually someone has to pay the piper. In other words, you cannot borrow money endlessly and resolve the situation through money printing without any negative consequences. It's not possible.
Right. So, Mark, where are your bets between Biden and Trump? Because what's your probability between the two?
Well, it's funny that you're asking because our friends, they think that Trump will lose by a wide margin. I'm not so sure because uh, you understand, in the US,
Mm,
the demographics have changed a lot
mm,
uh, from being maybe 80%, 90% white people to now the white people maybe 60%. So the Hispanics and the blacks, the population has grown a lot. The immigrants have increased the non-white population by a wide margin. And so I think that Trump still has a chance to get elected because you're, say, middle class family. You live in the suburbs and you see this defund the police.
mm,
And at the same time they defund the police, the crime rate is going through the roof.
mm.
In big cities like Los Angeles,
Absolutely.
Chicago, uh, Minnesota, New York, the crime rate has gone up something like 100% since they began this movement to defund the police because the police says, why should we risk our lives?
Mm,
And then the population is ungrateful to us. So they stand back. They, they watch how crimes occur. They watch how they loot shops. They
mm.
don't do anything. So the upper middle class and the wealthy people will say to themselves, well, if this is the case, well, we better get Trump back in because under him, he will, if he needs to, use the army to actually maintain law and order. So I think actually Trump, given the demographics that still exist, the demographics will not be the same in 20 years' time. But at the present time, the white population is still the majority. I think he can still win.
Right. And if that happens, that's something we need to wait and see from here on as well. And with this, Mark, the kind of anti Chinese sentiment which is going around, that's something which is catching eyes of every Indian. Now, do you think this movement against China could probably make India and convert India into a manufacturing hub? And therefore, in a long term, it could be a structural bull market for India because a lot of companies are looking to come to India for the manufacturing perspective. I'm sure we can't replace China immediately, but from a 5 to 10 year perspective, we could start at least by supplementing China on the manufacturing side. Does this give you confidence on India there?
Well, I was going to say that in the new world, I envision there will be less trade as a percent of the global economy
Mm,
and more local manufacturing. In other words, India has the critical size,
mm,
1.2, 1.3 billion people, to have own an own car industry that is very efficient, an own appliance industry, and so forth and so on. And in principle, they wouldn't need to import a lot except maybe food and oil. But aside from these commodities, they don't need to import a lot. They could essentially manufacture just about everything themselves. In Switzerland, by comparison, our population is 7 million. How do you want to have a domestic car industry? The country is far too
Mm.
small. So unless we have a car industry for export, and we wouldn't be able to compete because our uh, labor cost and cost of production and regulation is so much higher than anywhere else in the world. So it wouldn't pay to do certain things in Switzerland. It's cheaper to import these things. But in the case of India, the market is big enough to have a vibrant manufacturing industry.
Right. And with this, if you have to talk about India as an investment bet amongst other emerging markets, with current valuations, where would you actually place India?
Well, India, by comparison to Malaysia, Indonesia, Thailand, Philippines, Singapore, Hong Kong, and so forth, is expensive, period.
Correct.
Still, the banking sector is inexpensive. But uh, any blue chip stock in India, as you know, whether you look at Unilever or Nestle or whatever, is expensive, very expensive. What is very inexpensive at the moment are Hong Kong shares, because everything has been bad for Hong Kong. There are demonstrations that already killed the economy and tourism, and they had recently these security laws, which I think are good for Hong Kong. Don't misunderstand me. I think Hong Kong can only survive as part of China. It cannot survive independently,
Correct.
and especially not with demonstrators, and especially not with the level of skills they have. You see, as is the case in India, there are many different languages in China. The main language is Mandarin. And the Hong Kong Chinese, they speak Cantonese, which you can't really use on the mainland.
Hmm.
So they don't have the necessary skills to actually compete with China. And if you look back 30 years, you look at Shenzhen, neighboring Hong Kong, the Shenzhen was tiny, and Hong Kong was 27% of the Chinese economy. Today, Hong Kong is only 2% of the Chinese economy, and Shenzhen is larger than Hong Kong, and the population of Shenzhen is larger than Hong Kong. So the Hong Kong Chinese, they either have to accept we're part of China and we are a nice child of China, or we try to be, obstinate and destructive through demonstrations that are also sponsored by the US, I may add. And obviously were directed against China. It was essentially demonstrations that were supposed to embarrass China.
Hmm.
This is what happened.
Happened. Right. And so right now, Mark, thing is, people have missed the bus when you said invest in the month of March because there was fear as to where COVID is going. We didn't know. Now, the next hope is that a vaccination could be coming out soon. Taking that into consideration, if someone has to think of investments right now, how would you advise an investor to do the allocation, say, between equity, commodities, with the way gold as well as silver that have been going up? And if you have to look at real estate as a part of the portfolio as well, how would you divide it?
Well, first of all, about the vaccine, uh, let me ask your viewers and yours, if tomorrow someone produces a vaccine, and if it happens to be Bill Gates, would you take that vaccine? That vaccine may be like a lobotomy.
Yeah.
So I'm not so sure. I would
Right.
be the first one to try the vaccine. I would want to see some results before I take that. And number two, the world is always uncertain
Mm,
and the world is always changing. And what has worked for the last 10 years or 20 years may not work for the next 10 years. I mean, I think in general, the returns from investments will be very low.
mm,
I would say to myself, if you have money, how do I minimize losing money for the next 10 years or so? How can I survive the present time without losing everything? So let's start with this objective. We don't want to lose everything.
money. Correct.
Not lose everything means to be or to have some diversification.
Mm,
And not losing everything means also that you are employable. In other words, if you lose your job tomorrow as a moderator, that you can find another job somewhere else, that you're employable. And so I think people always think about investing as investing money in stocks or bonds or commodities or real estate. They don't think much about investing in your own education, in
mm,
your skills, investing in your survival skills.
mm,
That may involve, some martial arts or some weapons. But I'm just saying, we move into an uncertain world and we need to be prepared on all sides. And so, one of the things I'm suggesting to people, you live in New York City or in London and so forth, you should own a house in the countryside.
mm,
It's not going to be a very good investment, but in a pandemic or in times of hardship, in the countryside, you will get access to food.
mm.
And ideally, you live somewhere where there is water. I live next to a river.
Correct.
The river can dry out because they're building everywhere dams. And so water will become a big issue in future. So all these things, I would say, own some stocks, 25%, own some cash and bonds, 25%, own some precious metals around 20, 25%,
Mm,
and put some real estate in your portfolio, 25% or so. And then, and this is important, many times in history, people have lost everything because they had all their money in one country. Then came 1918, the Russian Revolution, the October Revolution, and then we had China take over in Shanghai 1949. The people that had all their money in local assets, factories and real estate and so forth, they lost everything. So you have to diversify internationally.
mm,
And the disadvantage of owning physical gold is if you leave India, I don't think the government will allow you to carry 100 kilos of gold with you on the airplane. You understand? And but with bitcoins, you don't have that problem. So I think uh, kind of cryptocurrencies is an asset class to consider.
mm, mm. Yeah, that's something which is evolving right now as well. And in terms of crude, what's the sense you have right now? Because low crude prices, Mark, have been something that probably everyone's thinking that it's the best thing that could ever happen to India. Do you think it really falls in place? Because, again, for a country like India, my perspective has always been that it's a double whammy situation when it's low crude prices and it's a developing economy.
Well, I think for India, deregulation is the most important, and the simplification of the legal system. So there's a lot of improvement that can take place if the government and the bureaucracy is determined to actually carry out these improvements. As you know, there's a lot of vested interest in India that doesn't want to liberalize the economy, that actually likes complicated regulation and so forth. And if you look back at India's history, say 1,000 years ago, India was one of the richest areas in the world
Mm,
and the most advanced economies in terms of engineering skills, mathematics, and architectural skills, and so forth. Uh, and then somehow they started to fight with each other, the various kingdoms, and then there was the Muslim invasion and so forth. And India went down relative to the rest of the world. I don't think that this necessarily has to be the case forever. I
mm,
think as a percent of global GDP, both China and India can grow and be again something like 50, 70% of global GDP combined,
right.
as they were around the year 1000.
Right. So, Mark, if you have to look at India alone, what sectors would you be positive on?
Well, the manufacturing sector, I think, is okay.
Mm,
And infrastructure related investments and real estate. I think that is uh, second homes, I think, will become very popular in India, either in the mountains or along the sea. So these are investments I would look at.
right. And what's your view with regards to the modern monetary theory? Because that's something which has been talked about a lot right now.
Yes. I mean, there was a German economist called Silvio Gesell.
Mm,
He lived around 1880 to 1930, something like this. And he wrote his books about economies. I have a copy here
mm,
in 1909 or something like this. And he actually introduced the concept of negative interest rates and of basic income and so forth. So this monetary theory shouldn't be called modern because it's been in existence for a long time. And I think that some countries have tried a basic income and it hasn't been very successful. I
mm,
think the best to get an economy moving is to give an incentive to people to work. And the incentive normally is not just to say to someone, oh, you're a nice guy and
mm,
you've done a good job. The incentive are dollar and cents. In other words, what you earn. If you earn more, you will think, oh, this company appreciates my work. And if you go for a job interview and nobody offers you the expectation of your salary, maybe you should look at the mirror and say, maybe I don't qualify for these jobs, or maybe I have to improve my skills to get these better jobs, and so forth. But basically, the capitalistic system, I believe still, the best system is capitalism and the free market. Socialism. I've been to many socialist countries from the 1960s onwards. It does not work. It
Right.
does work, but it creates tremendous poverty for people.
Hmm.
And under socialism, communism, when you have a central authority
Hmm.
telling you what to do every day, where's your freedom? So I think when people are free, they tend to be happier than when people are oppressed.
Hmm.
And therefore, I strongly advocate capitalism that is actually a dynamic system, capitalism. It changes all the time. Some companies flourish and then other technologies come up, like Zoom comes up, then we don't have to travel anymore. We
Right.
don't have to go to business meeting. You don't have to go to the office every day. You can stay at home. I can stay at home and so forth. So that allows the world to change. And there is this so-called creative destruction. Some companies disappear, like the horse carriage industry has disappeared. The automobile came along. Eventually, maybe there will be just flying objects that take you from A to B. I don't know. But it will be different, our world, in 20, 50 years than it is now.
Right. And Mark, my last question to you is we've spoken about the Netflixes, Amazons, Apples, who've seen fabulous returns from the kind of lows right now. Now, with this, you have Reliance Industries, which is an Indian company where you have
Yes.
all of these companies from, say, Apple, you've got, I mean, majority of these conglomerates have come and invested in a Reliance Industries right now. Facebook has come in, Google has come in. Do you think that's going to be a stock that someone should hold, taking the current valuations? Do you see Reliance, probably Geo, catching up to any of these names?
Yes. I mean, in China, we have Tencent, we have Alibaba.
Mm.
These are all huge companies. And now we have Ant Financial going public and so forth. Uh, This is the theme I have. I think in 50 years, the US will no longer be the dominant market. At the present time, right now, the American stock market is 50% of the market capitalization of the world.
Word.
And that in 1989, Japan
Mm.
was 50% of the world.
Mhm.
At the peak of the Nikkei at 39,000, it was 50% of the world. Now Japan is about 7% of the world. I think in 20, 30 years, the US will be probably 20% of the world, maximum.
Right.
And India will be much larger as a percent of the world's market cap, as well as China.
Mhm. And that's going to be, I think, something which all of us will be looking forward to as well. But thank you, Mark. Thank you so much for joining us on the show
My
at Nirmal
pleasure.
Bang. Great insights. I hope you enjoyed the conversation and hoping for you to come visit us soon as well once the lockdown unturns.
Okay. Thank you very
Thank you
much
and
for
stay
having me.
safe.
Bye bye. Thank you.
Bye.
I have to see how I close this.